Hello, welcome to this video, and in this video I want to explain to you the MACD crossover. Yes, the MACD crossover. I know so many of you have actually heard about the MACD crossover and how you can actually make use of the MA crossover, and how you could actually make use of the different moving averages, how you can combine them to be profitable. So if you're new to this channel, just before we continue, I'd like you to click the subscribe button so that you can be part of the community, and also do not forget to click the bell button so that you can get notifications whenever we upload new videos and tutorials like this. All we do here is make money in this channel, so it's necessary that you're part of this community. It's gonna do you a lot of good. So jumping right into our charts, what are the things that we need to first of all understand? Now, moving average in itself is a trend indicator, in the sense that it helps you to know what's happening in the market, if the market is moving upwards or downwards or sideways. There are only three patterns that the market forms. We have the upward movement, we have the downward movement, we have the upward movement, number two we have downward movement, and number three we have sideways. Now I'm going to show you each of these movements real quick, and I will explain to you the ones you need. Basically what you need is the upward and the downward movement. You have nothing to do with the sideways movement. When the market is moving sideways, it tells you that the market is consolidating. That means the market is indecisive. That means the argument between the buyers and the sellers is inconclusive. So that is why you are having a sideways movement. But upwards means the buyers are strong, are winning the argument. That's why the market is moving in the uptrend. But in a downtrend, the sellers are winning. That is, there's more supply in the market than demand. That's why the market is moving downwards. So quickly, now how do you set up this strategy? We're going to be needing three moving averages. The first one is the 200 moving average. Okay, so you go to your trend moving average, drag and drop. So you have this as 200. The first is the 200 moving average. You can give it any color, let's say white. Click OK. Exponential. Then drop the second one, make it 50. Exponential. Change the color. Let's make that yellow. Say OK. All right. Then the last one, you drop it here. Let's make that 13. Make that 13. Then let's make this red. You can either use 13 or you could use 9, you know, whichever. That's the period, whichever that suits you. But all moving averages are exponential. Remember that all moving averages are exponential moving averages. Yes. So how do you make use of this strategy? It's very simple. Like I made mention here earlier, we talked about the upwards movement. You can see that the 13 and the 30 moving average and the 50 moving average, you can see they crossed above the 200, which is this white. You can see this tells you that the market is bullish, is an uptrend. Now you can see that then we have the downtrend when the red and yellow have crossed below the white. Isn't that? Yes. Then we now have a situation whereby it's indecisive, like sideways. You can see something like here. You can see here. You can see here that this crossed the white. You can see yellow crossed the white. As yellow was crossing the white, the red was crossing back upwards. So you can see from here to here, it was basically not. It's basically like nothing was happening in the market. That is one of the easiest way of spotting an indecisive market or a consolidating market. The second way you can spot this is, you notice that your moving average is a 200 EMA. Your 200 exponential moving average, this white one, you see that it flattens. It's not pointing downwards like here, neither is it pointing upwards like here, but you can see it's flattened out. It's more or less like an horizontal line. So between here and here tells you that nothing is actually happening in the market and you need to stay away. So now, having understood this scenarios and these strategies, how do we want to filter when we should take a trade and when we shouldn't take a trade? Now, this is where you're going to introduce the all-knowing and super stochastic. If you check most of my strategies, I usually include the stochastic. Why? Because the stochastics help me to make my entries as quick as possible. I get into the market fast and I get out of the market fast, no strings attached. So the next I'm going to be adding here is my stochastic. So you just come over here under oscillators, then you click stochastic. If you're having problems adding indicators to your chart, not to worry, I have a video that you can just go over to my channel and you will see a video on how to add indicators to your chart and templates to your chart, how to create templates also. So with that, then just the settings I usually use is 933. You can see K period is 9, slowing is 3, the period is 3. So you just click OK and it adds that to your chart. Then that's it. So now, how do I work with this? The first thing I need to do is I want to understand the trend of the market. You can see in this particular scenario, you can see the market is not flat. You can see the market is, you can see the white, which is the 200 EMA, you can see it drifting downwards. So what am I looking for? My stochastic 80 mark is overbought, my stochastic 20 mark is oversold. So what I want to see a scenario whereby all the moving averages are pointing in one direction and I have an oversold or overbought condition on my stochastic. Now let me explain to you extensively. In a downward trend, I want to see that my moving average follows sequentially. That is, I'll be having the 200, the 50 and the 13 or the 9, whichever. I'll have them in that sequence. The white will be up, the yellow will follow below, then the red will follow below. This tells me that the downtrend is very strong. Then I want to see a little pullback, you know, right here. I want to see a little pullback to the overbought region. This tells me that even though the trend is moving downwards, it has given me a little bit of discount to the overbought region right here for the next movement downwards. You can see this is a very good scenario right here. You can see the market was coming down, then it pushed back, pushing back up. You can see that your stochastic came right here, and though it crossed above my 50, you understand, it crossed my 50, but it didn't cross, but my 50 did not cross the 200. Only the red crossed and came back down. So in this kind of scenario, I'll only be entering when this red crossed back downwards. You can see just right here is where you enter your trend, you enter your price, and you make your profit here. Now let's see another scenario. This is another good scenario. This is the particular scenario that I'm actually looking for. The situation whereby I have an oversold condition, an overbought condition, but the two of them are pointing downwards and none crosses the other. You can see this is below this and this is below this, and I have this situation here. You can see this is overbought. So in this scenario, I just buy, I'll sell here, and you make your profit. Now where you take your profit depends on you. You can take your profit right here, or you can take your profit at the previous low. You can see the market dropped here. So if you enter, you can make this your profit target, or you can make your profit target when the stochastic comes to the 20 mark or the oversold mark. Yeah, so let's look at the buy scenario so that we can understand it much better. Okay, I think I'm having something like this. All right, see, you can see red first up, yellow. You can see they follow sequentially. After they all cross the 200, then you look for scenarios where you have an oversold region. That is when the market gives you a discount, just right here. And then right here, then you can place your buy. You know, just right here is where you place your buy trade, and you take off right here. Sorry, you can buy here, then you sell when it touches here. You can see just there. So that's just how it works. Very simple and easy without stress. So this is all you actually need to be successful trading this strategy. So just a quick recap. Now you want to make sure that you have your moving averages set up, your 200, 50 and your 9 or 13. Then you have your stochastic also set up, your 9, 3 and 3. Now what you want to look for is, in a buy trend, you want all your moving averages to have crossed the 200, and you want them to follow sequentially. That is, you have your 9, you have your 50 and you have your 200 all crossed above each other and looking this way. See, you know, they follow themselves consecutively. Then you're waiting for a discount in the market, that is the pullback, like here, with none of them crossing back. So you have this, then you place your entry right here, and that is it. Or you can have a second scenario whereby only the 9 crosses the 50, but the 50 remains where it is and does not cross the 200. So the 9 crosses the 50 downwards and crosses back upwards. In that case, once it crosses back upwards, then you place your entry, then you take your profits either at the overbought region or at the previous high, like here. So that's for a buy. Then for the sell, you want a scenario whereby the market, you can see just the opposite of what we just did for the buy. So they want the market they want 50 and 9 to cross this, and you look for an oversold region. Sorry, you look for an overbought region. Yes, so you look for an overbought region, then you place your entry and wait for it to get to your oversold before you take your profit, or you let it hit the previous low, which is here. So that is how you can actually trade this strategy. So if you're new to this channel, please, and if you enjoy this piece, please share with your friends, and also do not forget to subscribe to this channel and click the bell button. We usually upload videos like this once or twice a week. Preferably we like to do this Tuesdays and Thursdays, but at most on Thursdays we get this to you. So it's necessary that you come back and check for new strategies that are going to help you to be profitable. There are so many links down below, like indicators that you can download, and so many links to maybe some courses that you could get, you know, and some videos that can help you, all in the description below. So just go ahead and click the description below and you see all the links to all the necessary things that can help you to be profitable. I would like to see you in the next video. Remain your boy Leki. Bye for now.